Hey guys, how's it going? It's Andy from MagooInvesting. Welcome back. I'm making videos this week because I have been out of work for the past 3 days because I got stung on the top of a foot by a yellow jacket and it swelled up so much that I could stop having feeling in the end of my toes. So now I'm here and I've had some really interesting things happen in my overall stock portfolio so far this week. Today we're going to be talking about Peloton, how I've been burned there, why I'm down around 50%, and why I'm going to be adding on to my position instead of selling, and talk about some important lessons that I think is important to remember if something like this happens to you. We're in a time in the market right now where expectations are at the highest it's ever been. You have all these stocks that are crazy valuations, and it's really hard to justify them. And eventually they're going to come back to earth. It might not be this week, this year, or in the next couple of years, but eventually the valuations are probably going to catch up based off of the trend of, the 100+ years we've seen on the stock market. So I'm going to talk about what I'm doing there. And then we had some really interesting news about General Electric being split into 3 different stocks, and I'll talk about that in a future video that should come out probably tomorrow, considering I am home and I'm not working today. I'm going to try to keep these videos short and sweet so people can get all the way through them. So I really appreciate it if you hit that like and subscribe button and make it to the end of the video, because I'm going to try to keep it to the point. So Peloton is one of these stocks that if you think of the stay-at-home stocks that really did well at the beginning of 2020, going up until a week ago. This was a stock that was synonymous with the stay-at-home movement, and you had a lot of these stocks like Zoom, Peloton, stuff like this that was going to be doing well because people were staying home and are going to be spending money on that instead of going out and spending money on retailers or travel. And so as a result, for the past couple years, it was doing all right, and then it shot up to highs of 162 on Christmas Day of 2020. As of right now, the stock is sitting at $51. Peloton is a stock that doesn't really go along with my values. When I talk about my values as an investor, I have a couple core principles that I like to look at to decide if I want to buy into a stock. The first one is it a stock that I own or that I use the company. I think this is really important because if you have a company that you have no idea what they do, maybe you bought it because someone else told you to, if something goes wrong, you're going to likely sell for a loss just to kind of dump it. And if things go well, you're not as tied to it and believe in it in the long run. So I think it's really important to buy into companies that mean something to you. Peloton does not really go along with that. But what I have seen on the other end is that Peloton is a company that a lot of people love. I am too poor to own a Peloton. I like going to the gym, but I understand the appeal of a Peloton to some people that are busy, maybe have some extra space in their house or their apartment that they could put this into, and they love the product. And when I look at Peloton, I thought it was a great opportunity. When I put up the stock chart for where I saw it charted, I bought in around the $100 mark. This was a level that had been tested a couple times and was looking pretty solid for the past couple months. You've had a couple large declines, but it has bounced back and done pretty well. But now we had the earnings report that came out last week where they lowered their guidance going forward. And people are saying, oh, this is the end of Peloton. It's done incredibly well in the past year, but it's been so overvalued. And for a lot of people, when they see, I'm down 50% in this position, they're like, oh, of course you are. This is a stock that should never have had a valuation this high. When you look at the overall stock market right now, you can point out plenty of great examples of stocks that are at ridiculous valuations. The easiest, the most obvious is going to be Tesla. Can you justify the valuation right now? Not really, but it doesn't matter because until something happens to knock Tesla down, it's going to continue to ride the momentum, and momentum is such an important thing in the overall stock market. And with this earnings report, this was the major event that kind of knocked Peloton off of its high pedestal. And so the next question is, what am I going to do with it? The reason that I think it's so important to buy stocks that you actually care about is that you believe in the view of the company and the future of the company in the long run, because it would just be so much easier for me to be like, you know what, I made a mistake here, I'm down 50%, I'm just gonna sell. The reason I'm not doing that is because I'm very particular with my position sizing. If your whole portfolio was all Peloton and the stock fell this much, you'd be in a really tough spot. But because it's only around 8% of my overall portfolio, it still hurts when it's down 50%. But it's not gonna be something where I'm gonna be losing sleep over it. Peloton is a company that I believe is going to be doing well going into the future. I think their business model and the fact that they're kind of toning down some of their expensive products to reach a wider market, I think is a really good step for the company going forward. And with their recurring revenue, which is one of the most attractive business models in my opinion, doing pretty well, and people are showing that, maybe I don't want to travel 30 minutes each way to get to the gym, have to deal with all the parking. Maybe I'll just buy Peloton and do that route. I think it does have a future going forward. I don't think it's going to reach the highs of 160 in the next year, but this is a company that I'm going to continue to average into. When I throw around the term doubling down, it doesn't mean that, say I owned 100 shares, it falls 50%, I'm going to buy 100 more shares. What it means is that I'm going to be doubling down on my bet that I think Peloton is a good bet for the long run. And so I'm not going to be doubling my position, but I'm going to be slowly adding as the stock kind of settles down. Right now, the volatility is so high where it's pretty dangerous to buy in right now. You could have a nice correction where it snaps back up, people buy the dip, or the momentum could continue to push it down. But since it's a company I believe in for the long run, and I have cash sitting on the side, I've been slowly adding, a couple shares here and there, lowering my average price. So instead of having to get back up to $105, maybe I'll only have to get back up to $85. And so I think this is a really important lesson for people to understand, because I've been reading a lot of financial books right now because I think it's fascinating, the psychology behind investing. And one of the hardest things for people to understand is why a lot of people are very risk averse right now, because they see these crazy valuations that don't make a lot of sense. And everyone is like, oh, this doesn't make sense. We're going to have a major crash. For the younger investors that haven't been through a market correction, why would you believe that there's going to be a correction in your lifetime or the time that you've been investing? Valuation has really meant nothing. You don't have value investors doing incredibly well over the past couple years, considering the whole market has been pretty much just going straight up, and the stuff that has these crazy valuations have been going, in a straight line upward. So for a lot of people, they don't have any reason to be worried. Peloton, I think, is an interesting case where it should be a cautionary tale for people that are buying into overhyped stocks. Things go really well with these hype stocks until the hype dies off and some larger players start selling and the momentum pushes it down. Am I saying this is going to happen to some popular stocks like Tesla or some of the stuff you see on Wall Street bets? No, but it is a potential every time you buy into a hype stock. So I bought into a hype stock, but it is a company that I actually believe in. So instead of being burned 50%, selling and kind of walking away with my tail between my legs, I'm going to continue to buy in, continue to lower my average price, and hold on to Peloton for the long run. So I'm very curious to hear what you guys have to say about valuations right now, or just Peloton stock in general. Is this something that you're looking to buy on the dip? Do you think it's completely toast and it's going to continue to fall? Or just what do you think about it overall? Thanks for watching this video. I appreciate all the support. If you made it to the end of the video, I really appreciate you, and I would love if you hit the like and subscribe button, and I will see you in the next video. Thanks for watching.